Or have any questions, please email me at acala@dominionlending.ca or email the Greater Langley Chamber of Commerce, and they can put you through and make sure that your questions get addressed. We are all in this circumstance together, but not everybody's in the same boat. Everybody is very different, and we certainly recognize that. And whatever circumstances you're facing, I want you to know that we are here to help. So a little bit about me and my team is that we're here to provide financial wellness by educating, empowering, and elevating you to have a better understanding on how mortgages work to your benefit and how to use your equity, acquire assets, and manage money to best meet the goals in the different stages of your life. Myself here, I've been doing this for 16 years, as well as hosting the Mortgage Show on CKNW for the last 11. And in 2018, I became the author of a book called The Mortgage Code, which all the proceeds go to Access Youth Outreach Services. And my show, The Mortgage Show, can be heard every Saturday at 7 p.m. on CKNW. And if you are a CKNW listener, you would have heard that I often get the opportunity to fill in for Vancouver Consumer. And I have the opportunity through that as well to be one of Chorus's and Global News's mortgage experts. So the things that we're going to go over primarily are: what is a mortgage deferral? How exactly does it work? Who qualifies? What about my rental property mortgage? What about my secured line of credit? What about credit cards? What if I'm working during COVID-19? And what should I be doing in today's market for my personal circumstance? So we're going to aim to go through the majority of these topics. And of course, if anything specific comes up for you, please know that our service is free and that we're here to help. So I'm just going to go through to a Global News interview that we did at the time of, here we are, at the time of the presentation. I'm just going to have to go out of here for a moment and go to, here is the Mortgage Show on CKNW Global News site. And we had a story that we did on mortgage deferrals that I'll share with you here.
With Casa Mendoza, you can enjoy the passion of Mexico in
I guess they want to remind us that Cinco de Mayo is on the way. I haven't figured out how to skip the commercials yet, so a little comical relief amongst some serious issues.
Muy bueno. Then, throw some lime juice in the pan, the way you throw a drink in the face of a sworn enemy. Each tortilla is triple baked.
Hopefully you've had your lunch already.
Good love triangle. Casa Mendoza, pasión por las tortillas.
During this time of uncertainty with the economy and hard times for homeowners, the Government of Canada has announced that it will be allowing some mortgages to be deferred. Joining me now is mortgage professional Angela Calla for more on this. And how does this actually work, Angela?
Well, a mortgage deferral, if approved, allows you to delay your payments for up to 6 months. And so what happens is you are approved for that, and although you're not obligated to make a principal and interest payment, that amount will need to be paid back once the deferral is over the period of time that you have left in the term. So after the deferral, your payments will be increased, and you're still responsible to make your property tax payments if your property taxes are on there, and your mortgage insurance and everything else associated with it. So on a case-by-case basis, depending on the size of your mortgage, how long your term is, will really determine for you if you're comfortable with a mortgage deferral.
So it might not work for all people, but who actually qualifies for it?
Yes, only people at this time who are unemployed and unable to work due to COVID-19. The lenders are adapting their policies daily and looking together on a unified response on how they can help Canadians. And so as we've seen this progress and develop, the good news is one lender came out the other day, Scotiabank, and said that regardless of occupancy for up to 4 Scotiabank mortgages, we will apply the deferral. So we're certainly hoping that other lenders will be able to follow suit. Other options that are out there is may be able to re-amortize your loan. Maybe you only had 15 or 20 years left. You might be able to go to 30 years. So there's a lot of options that are available. The first thing you should do is contact a mortgage professional to have a discussion about it. And then when it comes to actually getting the deferral, you will have to contact the lender directly.
How can people find out more information from you?
If they go to our blog at angelacalla.ca, we have up-to-date information with how lenders are coming together to help, as well as our Facebook page, Angela Calla Mortgage Team. Please join us.
All right, thank you. So much uncertainty and a lot more to discuss, but that's all.
Excellent. So at the time when we started this, hang on, I'm just trying to get back to the PowerPoint here. Okay. Here we go. So back on that, the important categories that we like to go over is that this is delayed payments. So you are essentially paying interest on interest. So that's one thing to consider. It's up to 6 months of support. Approval is not guaranteed. However, the lenders have very quickly adapted process. Later in the presentation, we're going to talk a little bit about how they've adapted very quickly, but the most important way to protect your credit throughout this time period is to ensure that you're getting the opportunity to do this in writing. The lenders at the time of this being aired were getting 20,000 phone calls a day. And they were also trying to train their staff with what they were going to do. And so each day, if you called in as a consumer, you might get told, oh, you can only have 1 month or you can have 3 months. And then some lenders adapted their policy all over. I want to let you know, as of today's date, most lenders are working on about a 3-day turnaround time. So make sure that you get the information in writing. Please go directly to the website on our blog at angelacalla.ca. We do have a list of lenders and their contact information. They all have a COVID-19 process, and getting it in writing will ensure that your credit is protected. So for whatever reason, if things aren't matching up with your credit report at a later point in time, your credit can be protected. But if you are still employed and you are considered an essential service at this time, the qualifications will not happen. Now, the payments will increase. Each lender has an internal calculator that they will use, and based on the length of time that you've had your mortgage will determine what it is. I want to let you know that we've been working with a lot of law firms as well for clients that have just recently funded mortgages. And even the lenders that are just funding mortgages at this specific time period, if you do not have your property rented yet, if you bought it as an investment property, what they are, or if you just bought a home and you're moving into it, a lot of the lenders are helping by making, allowing you to just make the interest payment and not the principal. So all the lenders are really working together to be able to help borrowers at this time. And talking about rental properties, now the lenders are allowing up to 4 properties regardless of occupancy. So this is really important because we come across some portfolios where people may have 10 mortgages and they're all with one lender. And in that circumstance, they are a little bit stuck because the lenders only allow up to 4, including their principal residence. So keeping in mind of this snapshot in time and what we can learn for future, that's definitely a consideration that you're going to want to have is when you are looking at renewing those mortgages, you're going to want to look at diversifying your portfolio just like you would diversify an investment portfolio to protect yourself. And Landlord BC is a great resource that helps both landlords and tenants and goes through the step-by-step process. The secured lines of credit are a very interesting component that I believe it's important for people to take a look at right now, because what we have learned from 2008, when we certainly didn't have a health pandemic, but we certainly had a financial crisis. And there are similarities between how the markets have discounted their rate significantly with the bank, and the bank is adding liquidity into the market by buying bonds and putting purchase programs into place. And one thing that some people who were on this call will remember if they had a secured line of credit back in 2008 is the institutions, because they have the ability to do so with any secured line of credit, have the ability to send you a letter and increase that rate on you. And so if you have a large amount of utilization, let's say you have a mortgage that has a HELOC, which stands for home equity line of credit, or a secured line of credit on your home. It could be at prime, prime plus a half, prime plus one, and you have used tens of thousands of dollars on it, 100, 200,000. This is an area where, as a borrower, you want to look to protect yourself. And if you feel that making this payment might be a little bit troublesome for you at this time, you'll definitely want to look at either putting it into your mortgage and amortizing it out, or if you think you're going to miss a payment, make sure that you're in communication with the lender in advance, because when this has happened before, if somebody is in risk of missing a payment, they actually have the right to make the payments up to 3% of the outstanding balance, or call in the secured portion, putting us in a not comfortable situation. So although it's not intended to happen, this can be one of the missed things that can happen when we're in this time. So seeing what happened in 2008, we want to help people be proactive with that. So it's good to take a look at it and see if you have the best product for you. Also, there's relief available for credit cards. Some financial institutions are offering relief, but it is so important that you call for that, because what they are doing is they're deferring payments, they're reducing interest rates, and they are offering ongoing support, but only for those who are the ones that are following up consistently with them. So thankfully, due to technology such as Facebook, we're able to update these things very, very quickly. And so you have the ability to move through this and see what the options are. And so Facebook is actually a great place where if you can't get in touch with your lender, contacting them through Facebook is actually a little bit faster in some circumstances as well. So if you're working during COVID-19, it's very important to be proactive and protect yourself. Take a look at anything that is outside, and now is the time to see what we can do to make sure that you're protected by having 6 months of living expenses set aside. If not, consider taking out some equity for an emergency fund. We also, what we know is that we can't necessarily change what we don't know. So we have some budgeting tools that are available on our website. And what this is it's a PDF and an Excel that break down for you a list of what you have coming out of your account. And then when you see that, you might have some opportunities to free up some cash flow by either canceling old subscriptions or getting rid or reducing things that you're not utilizing anymore. And also on that is a one-stop shop for BC Hydro, Fortis, ICBC, and some things for the Canadian Emergency Relief Benefit as well. Now, this table was created to kind of give you a snapshot based on where you're at, to kind of show you a little bit about what general advice we've gathered for you throughout this time period. So if you're an existing variable rate mortgage holder, this is absolutely your time. Sit tight. Lenders have dropped their prime rates to 2.45. We highlight this because just because the Bank of Canada moves their prime rate, this does not mean that the individual banks have to follow. And we've certainly seen lots of times in history when this has not happened. And also in 2016, we saw one of the major banks actually change their prime rate, completely inconsistent with any Bank of Canada and completely inconsistent with any of the other banks. So the banks have the ability to modify that based on their own internal structuring. So we definitely want to keep that in mind. And the Bank of Canada may drop these rates again. Again, it's a 50-50 whether that'll be passed along. But if you're considering converting to a fixed mortgage rate right now, I would say enjoy your newfound savings for a while and give fixed mortgage rates some time to settle. And when we go into the next slide, I'll explain that a little bit more. But fixed rates are actually moving higher now, and they're moving for a variety of reasons. So staying the course will allow time for the bond market to find its level. And when it does, fixed rates have come down. And since April 1st, we've definitely seen that come down. And we're actually starting to see a little bit of competition and newer products come into the market because people are still actively purchasing in this market as well, because life doesn't stop. Our children don't stop growing. If you had a divorce in the works, it's generally still continuing to move forward. And if you're getting a new or renewing a mortgage, you want to ensure flexibility above all else. Variable rates can be converted to a fixed rate at any time and come with the smallest penalties. And also shorter terms to 5 rates might be better. And this is why access is so important. When you utilize the services of an independent professional, they can show you the difference between monoline lender penalties and big bank penalties. And those penalties either are the difference between an emergency fund or an extra bedroom moving up or down the property ladder. So if you're a stretched borrower right now, the cash flow is key, and the lender that you're with will have a lot to do with that. And if you can refinance to improve your cash flow, that'll protect you and put you in a better situation. And again, if you feel that you're at risk of missing any of your payments, it's important to act sooner rather than later, because the credit score plays such a big role in that. And while we know that the bond market is very active and there's a lot of programs put in place for liquidity, there's a lot of an underutilized tool that is really helping a lot of people who are over 55 right now. And it's known as a reverse mortgage. And the reverse mortgage, I also do have that information on my website as well. But the reverse mortgage allows anybody over 55 to take a mortgage. They can take a mortgage in either a lump sum or a lump sum with monthly payments, and it's not looked at as income. So they won't lose the pensions or the emergency benefits that they've applied for, and it allows them to keep their investments in place. And this is extremely important right now when most people have had a loss in the market, because we know that that will come back. And if they have to take that money out of the market to live, like a lot of seniors do, they use CPP, OAS, but they also utilize their investments as well. Taking a reverse mortgage can protect those investments and help them in this unprecedented time when they're not used to that. And it's also being used right now as a transfer of wealth, or to help their children get into the market if their children are renting and their kids are growing up too fast. And the best part about it, of course, is the no payment, the no stress test qualification, and the fact that it's not taxed as income. So it allows them to protect their wealth during this time period while they're waiting for things to balance out a little bit. So how fixed interest rates are calculated is based on the bond market, but also the cost of pricing from the lending institutions. So I just kind of wanted to articulate about this a little bit. I've written about this in my book, The Mortgage Code, but I always like to come back to it just to help people understand a little bit about what's going on and why. So normally you can see that with the overnight rate, there's a normal spread between what the fixed rates are based on and what the spread is that the lenders are getting. So right when this started to hit, you could see that the spread is very large between the fixed and variable rates. And this was done for a variety of reasons. One is that the banks were getting less deposits. With businesses being shut down, with people going on EI, they have less money in the bank. So based on how liquidity was at the time, they didn't have the ability to lend. So they were obviously pricing themselves differently. And also they had they wanted to ensure that they slowed it a little bit. Now, as things are calming down a little bit, this was April, you could see the spread was too wide, but getting better. And now if we watch this today, as we are about 20 days into April here, we can see that the lenders over the last few days have been reducing their fixed rates a little bit. And we're hoping to find a little bit of a better balance moving forward. But statistically, from what experts who have been in the field like myself for a long period of time have seen, is we have seen this type of erratic behavior with interest rates. And while there might be a new normal, things won't necessarily go back to normal. While we're all adjusting, there will be a little bit of a reduction here in the spread. So that's why on the previous slide, we talked about, just waiting on your variable rate now. Just to let you know, mortgage professionals have always adapted to do things virtually. So we have been able to assist people through this crisis privately without bias, and their service is free. So there's never a concern about safety when you're dealing with this. One of the major reasons, again, why the banks had changed the spread in their pricing so much was they were also adapting to all the technology online that they had to go to, and reducing branch hours and adapting to all those policies as well. So the length of time that people would have to wait for responses and so forth, and people that they were taking off underwriting and bringing them into that category to help people is just so significant. So just know that as your front line, the mortgage broker industry has been adapted to this for the most part, significantly ahead of the major institutions, just because of how they've always been set up. So I hope that this has been a little bit helpful to you. It's given you some guidance on what to do or what questions to ask, or areas that you might be able to consider to save some money. And if you have any personal questions relating to your mortgage for you or a loved one, then don't hesitate to reach out to us. And if you're looking for the links that we discussed today, those are all linked on the website. The Facebook page gets updated a little bit quicker in some cases because it's easier to just go live and break things down. And if you have an organization that you would like some clarity on, or you're in a position of influence, such as a financial planner or a realtor, or a lawyer or an accountant that also would like to learn more about these types of options that are available to help the people that count on you, then know that we can certainly customize something for you. And some of the information about the why behind lenders is in my book, Where All the Proceeds Go to Access You. So I'd like to thank you for making this investment in your time and your education on the different options and the why behind everything mortgage. Are there any questions that I can answer from anybody who was watching? Sumner, I'm not sure if you can hear me here, but it looks like somebody's typing a question. I just can't see what it is. One of the questions that I had just prior to coming on here was, does this impact your credit negatively? And if the deferral is approved, 100% no, your credit is not impacted. And that's why earlier in the presentation, I had suggested that it's really important to get it in writing, because everybody's moving at a very fast adapting pace. And so if you have that in writing, in the event that a mistake was made and wasn't recorded properly by someone by mistake, then of course we have that, and we can help guiding you through to ensure that everything is properly recorded on your credit report to your favor.